Hi, this is Randy Finney with the Right Side of the Chart, and today's Wednesday, October 4th, 2017. In this video, we'll take a look at some of my favorite stocks in the gold mining sector. This is sort of a follow-up to the video I published earlier today, which gave my outlook on gold and the precious metal mining stocks. For those of you who hadn't had a chance to watch that, in a nutshell, I remain longer-term bullish on gold and have for the last couple of years. Looks like gold's in a new bull market, although we had a one heck of a consolidation period. And near term, there's some, as I covered in that video, some mixed signals really, or at least levels to watch, I should say. And again, watch that video. A lot of it has to do with my outlook for the euro and the U.S. dollar. Um, so I think a case could be made. We may have seen this correction, and the recent correction in gold may be over, or at most my scenario would have one more leg down, not a huge leg down, and then a resumption of the uptrend in gold. So with that being said, let me go over some of my top picks. I went through all the components of GDX last night, and I have just a handful here that are some of my favorites for long-term trades. I think they'll outperform the sector as a whole. And I have a few that if there is a bearish case to be made, and if we're going to see more downside in gold or the mining stocks, maybe a prolonged bear market or a deeper correction, I'll give you some to watch that are coming up on support that could actually be shorts. If for those of you looking for shorts in the gold mining sector, and those same stocks because they haven't broken support yet, they're at or near support now, so they could also be buying ops there. So again, it's depends largely on your outlook for the sector, what you're looking for. My job is to share trade ideas and what I see in my analysis, and it's your job to pull the trigger, long or short, on the trades that you like or don't like. All right. This is first up in the list in no particular order is SBGL. SBGL, this was a trade idea back here. And back in the days where stops weren't run, we had a nice entry on here. We never got stopped out, shorted it right after this breakdown here, and that one went on to hit the first target. In fact, let's take a look at that real quick. Here's a post. This is the first chart on that trade. Again, back in all the charts are usually time stamped. August 19th, 2016. There was a short entry. I had a first target there at 1666, expected a reaction, then a second potential target. The notes in the trade, when we hit the first target, although I had intended to extend the targets, since I didn't do it in advance, I had to just close the trade there. It wouldn't make any sense to, after the fact, after targets hit, to then add a second target. Didn't give anybody time to adjust their position. So that's the policy at least I have on the site. Even if I decide to extend that trade personally, if unless I extend a target beyond the final target before that final target is hit, then that's it. So there it is. That one went. This was the follow-up post when the first target was hit, and I mentioned these as potential second and third targets. And I just want to show you, how well the technicals work on these stocks. That was back in again. That was the end of August. Back in 2016, and come full circle today, you can see what happened. And this is just, again, I have a part on this in the FAQ section where I talk about why I use different price targets, why I list different price targets for these trades. These are all levels in which I expect a reaction. Now, in this case, we didn't have a reaction on the initial tag of T1, but what happened, we went down through it. There was a lot of downside velocity or momentum. You guys probably heard me use the term that I call momentum fueled overshoot, when you have a lot of, a near vertical drop or an ascent going into a price target. You tend to overshoot. We overshot, came back, provided a perfect back test at that level. One could have reshorted there, came back down, hit that second target that I had added, and look, this is TA 101. We bounced on it for weeks. Multiple candles right on that level, right on that support line. Finally broke it with some impulsive selling, came down to hit T3, little momentum fueled overshoot, and danced around T3 for a couple months actually. Then we continued down, and if you note down on that chart that I had there before, you can see this line down here. You see it coming in right between $6 and $6.50. That was a technically significant level. Now, I didn't mention that as a price target, but I can tell you what's happened since then. You can see prices continue to fall. That's the line there. I just added this line last night. This line back here, you can see was added back in 2015, October of 2015. We hit that line to the penny and then had a huge bounce off there. So these are, this is how technical analysis works. It does work, not 100% of the time, but my point being, this stock has come full circle. Most of the gold stocks are up closer to their highs, maybe in the, somewhere in the middle of the range in the last couple of years. This is a 2-year chart. So now where are we? Being this is one of my favorite, longer term trades, I see a nice bullish divergent low here. We have a divergent low on this most recent low. You can see the bullish divergence or positive divergence in place on the PPO and the RSI. You can see that PPO starting to curl up here. That's one view. So on the daily chart, I like that. We need to see a little technical evidence of a reversal. But again, if you're longer term bullish, you can take a stock here about 466, put a stop not too far below the recent lows. And again, I am open and even leaning slightly towards another one little more thrust down in the precious metal stocks. So if that's the case, now we're looking at a weekly chart. This chart's a lot simpler. I only have 3 horizontal lines just on this one right now, but you can see the potential divergence here, bullish divergence on the weekly time frame. Now, what I don't like, and it's giving me a little pause, is if you look at the PPO and I have it circled here, you can see a bearish or at least a potential bearish crossover. The PPO line's turned down, so we may get a cross down. And where I'm going with this is a very significant support level. You can see these reaction lows back from early 2014 right here. You can see reaction lows from 2015. We tested those again. So you have a lot of reaction. Remember, this is a weekly chart, 10 years of price history. Now, if we get another thrust down, and a lot of times when you come up to a key support level, what I notice is you get a flush out move. It'd almost be too easy to go long on this tag or this tag again. So very often what the market makers will do is they'll run that stop down. It clears out the last of the weak-handed longs. They've been holding the stock from up here, crying and feeling pain. It also clears out those that stepped in to buy right here with an objective stop place below, because if there's one thing I've seen in this market in recent months, it is a pattern of stop raids. What I've always considered well-placed stops trades, I've been doing this for many years, levels that, normally would provide objective stops. It seems they're getting hit. I don't know if that's program trading, those algo trades that are looking at that. I know that your stops, if you place a stop loss order, good to cancel, it can be seen. It's out there on the exchanges, so maybe they're going after stop clusters. Whatever it is, that's what's going on. And either way, if we get that, I just wanted to point it out. We may or may not, support is support until unless broken. So again, uh, you know, is it an objective long here? Absolutely, with a stop on probably a weekly solid close below that level. But if we had a little stop run or a little dip down below that level, then it would set this up, which would be uh, confirm the potential bullish divergence right now on the PPO. We already have the bullish divergence on the RSI, and give you that little flush out move, and that makes for a longer lasting rally when you have those little, what I call flush out move. Again, it's talking about the weak-handed longs, longs that give up, capitulate, maybe some shorts pile in on a breakdown of that support, they get squeezed on the way out. So talked a lot on this one because I think it's all there in the charts, the potential for a big move, and we're talking a move. If this is a new bull market in gold, this thing could come all the way up here to the, $11.50 area. So you're talking more than a double, which would probably outperform GDX as a whole, almost certainly if we get that. All right, next up, moving on, we'll go a little faster on the rest. CDE, we'll just take a look at the daily and the weekly charts. I like quite a few of the silver stocks stand out. Now remember, in GDX, you have a combination. It's not just, even though it's called the gold mining ETF, a lot of these companies bring both gold and silver and sometimes platinum, palladium, some other precious metals come out of the ground. So CDE is listed here as a silver mining stock. I don't know the percentage of what they mine, but I can tell you these silver stocks run, and I've traded this one for years. When they go, they go. I mean, here's a run back here, and we probably would have caught some of that. That's a 888% run in less than a year. It looks like 6 months. So what I see here, I see a nice downtrend line, quite a few reactions. I see a breakout. Nothing stellar so far. We haven't seen any explosive rally, and that's part of because gold and silver stocks have been facing some headwinds. But either way, we've taken out that downtrend line, and I do like this one for that reason, especially longer term. And here it is on the weekly chart. We take a look at a weekly chart. There's downtrend line breakout. There's a pretty well-defined downtrend line there. It's the same downtrend line, but it looks like things are firming up here a little bit on the weekly chart. We have uh, the PPO is still below the zero line, but it looks like it's pointed up. You could actually draw some divergence on there too. You can see the divergence. This is making a higher low. Prices are about even, so it looks like a descending triangle pattern right here. Either way, just one with potential. All right, let's go on to the next one, which would be Tahoe. Tahoe Resources, TAHO. Some very choppy price action recently, but I'll note here you have a divergent low. We had a divergent low over here too. You can see I had it drawn on the PPO, and that did lead to a rally. We had a downtrend line. There was a nice rally, pretty good gains. Don't underestimate the scope of these gains. That's a 33% rally right here from low to high. I'm using log scaling, which you need to on these charts. Anytime you have a chart that ranges from $4 a share up to $20 a share or anywhere even close to that, I feel it is imperative to use log scaling versus arithmetic or non-log scaling. And from a weekly perspective, busy. Forget about all those trend lines. What I see here is a potential bullish crossover in the PPO. I see a stock coming off oversold levels. And if you just look back historically, let's see what's happened when that stock, if you bought it when it was oversold. You had, rallies in almost every instance here. You had oversold here. This one went on. This was actually a divergent low. That's the tough thing about oversold. It's not a buy or sell signal in itself. You can see here, trying to draw these trend lines. There it is. So that was that. There was a divergent low right there. It shows easier like this. And we don't have divergence yet, but we do have, again, an oversold reading. And as I said, sometimes you have those single oversold readings or a cluster, and there was a little single reading. And these are definitely tradable rallies. You're talking to move up from 7 and a quarter, all the way up to almost $10 on just that one right there. And here it is again. It's a little extended oversold readings, so maybe this would be good for a little bit more. Next one up, SSRM. This one used to be SSRI, if I remember correctly. I used to trade SSRI, silver stock, all the time. SSR Mining, there it is. Here you had a downtrend line, divergent low right here, big rally. This stock can run. Again, some of these silver mining stocks, for whatever reason, are like, they're on steroids. When they have a rip, it's powerful, and vice versa. It cuts both ways. Don't forget that, and that's why we have stops. Either way, nice little downtrend line, little triangle pattern, breakout recently, and this one's bucking the trend. You guys know recent on the last advance on GDX, I actually picked the silver mining ETF as my proxy. I thought silver and the silver mining stocks were going to outperform gold, and I believe that had been the case recently. Either way, these stocks are looking pretty good. So there it is. That's a weekly chart on SSRM. There it is on a daily chart. Very well defined, this symmetrical triangle pattern. You can see this upper trend line, numerous reactions along the way, going all the way back here to the mid 2016 highs. It's been advancing pretty steadily. And forget about all these lines. This one's pretty significant here, but just look at each of these reaction highs. That's the key to this stock. As it takes out each previous reaction high, that's pretty bullish, and that will eventually open the door up for it to challenge these all-time highs, or at least that high back in 2016. And that's a pretty big move. The stock's only at $11 now. It could probably run up to the $16 level, especially if the charts firm up here. AG, First Majestic Silver Corp, another silver stock. There's your downtrend line, pretty well defined. This one has not broken above that downtrend line yet. This was a short trade before. That was the first target. Looks like we must have shorted it here on a breakdown. Like I said, these stocks are very profitable to trade long or short. That's about a 52% drop. There was a potential second target. Again, this goes back. I created that note back on May 20th, 2016. and that was back here. So yeah, this one went on to drop. You can see there's technical analysis, hit that potential second target with a little momentum overshoot, just went through there slightly for a couple days, and that was it. That was the end of that correction, at least until this point here. We danced along that support level. It was, well defined, numerous reactions. So where I'm going with this is more so to focus on this line right here. I have it at 708. So give or take, it's been sliced through a little bit. So put a little range around that $7 level, and we've been dancing through it sort of in this triangle pattern here. So this one you need to see a break above that, and that would be bullish. It's a pretty well-defined trend line. There's a first target would be that former target. Now that's unadjusted. That line, I'll tell you where the line was. 876 was my buy to cover target where I, covered that one. 871 would have been it's the actual where that line is. So you'd want to target on the long side, sell a little bit before it gets there. That would be a first target. Although, it's a pretty powerful pattern. You might want to just tuck that one away, ride stops up, protect profits. I think it can work its way all the way back up here to the $10 level for any really significant reaction or pullback. I can't recall if I started this one on the weekly chart. If not, let me just cover back there. There it is. On the weekly, you have a falling wedge with bullish divergence in place, just like you had a falling wedge right here. Bullish divergence, same thing right here. That wedge from bottom, not that you caught the bottom or it's easy to, 686% rally near vertical. Again, these silver stocks, for some reason, they have turbochargers on them when they run and they break out of these patterns, especially of course if the sector. You can't trade the mining stocks without confirmation, without the rest of the sector. So you need to see GDX, you need to see gold, silver all going up as well. And if that happens, this is where you get more bang for your buck than GDX, and that's why I'm doing this video. Let's see, that was AG, a couple more, MUX. McEwen, there it is, divergent low right there, bullish divergence, and at support. That's what stands out to me on this one. So I'll just show you right here. We had some reactions here, reaction there. So this is we're at the bottom of this support zone right here. We bounced off the top of it, came down to the bottom, and that one looks okay. Not one of my favorite, but it made the cut here for this video. There's a long-term weekly support zone, and actually at that, the way I have this one drawn, we're at the top of that support zone. So you can see this support zone comes from all these reactions right here, reactions from above and reactions from below. And the more reactions you have, the more valid or technically significant that support level is, in my opinion. So this one's at the top of a long-term support zone. Weekly indicators and momentum indicators, oscillators are still pointing lower. So this one might need a thrust down. In fact, it would be really make for a better entry to see that thrust down, hit the bottom of that support zone, get the RSI to oversold levels. We haven't been oversold since back here, but you can see when you get oversold, just look at what prices do. And it's not always instant. Sometimes you have a cluster of oversold readings. Sometimes you get these divergent lows where you're oversold deeply. Then you come back in, oversold once again to put in bullish divergence, and then boom, there's the big run. So this may be a single tap oversold reading, and I suspect it will. I don't, divergence would take months to play out, and it's possible. And if so, we'll just keep an eye on this one and revisit it at that time. So there's the ideal scenario, is a little more downside on that one. But that's plan A, and you have to have plan B. And plan B is, what do you do if they reverse right away? BVN, we're on a weekly time frame. I know I'm flipping back and forth. This one actually has the PPO is above the zero line and has been. That's a trend indicator. When the PPO is above the zero line, especially the 9 EMA, the latter of the two to cross, the trend is bullish. And when it's below, the trend is bearish. And if you're not sure, just look above and see what prices have done. So this one said sell or get out all throughout this bear market right here. Throughout that time, the PPO was below there on sell signal territory. Since this point right here, it is in it crossed above the zero line and remains above the zero line. So right now the trend is bullish. What you need to see here on this one is an upside break of that symmetrical triangle pattern, and that would be longer term bullish. Again, that was a weekly chart. We look at the daily chart. You can see a downtrend line, Not super well defined, but we have what I, at least in my book, minimum of three reactions. One, two, three. I always say any 2 points are random. It takes that third reaction to help to validate a trend line. And so it looks like a breakout, a near back test, and we need to move up. You can see a support zone, I'm sorry, a resistance zone right overhead right here. We need to clear that, and that should be smooth sailing, and that will also have taken us out of that weekly triangle pattern, which is much more significant, especially if you're a longer term trader. EGO, I have a question mark by EGO, not one of my favorites. Um, but one worth mentioning because here you can see some support back here. We had a reaction low back in early 2016. That level has been successfully defended. We had a little run right through it, but we snapped back up. And so far it's been moving up. It also took out this downtrend line, back tested the downtrend line, and has been advancing. So there's a potential one. Again, I put a question mark by it. Um, Weekly chart looks pretty good. You can see divergence here, divergence right there, with prices making lower lows. This is double divergence and a big, long, powerful downtrend line, pretty well defined to take out ultimately. With this, obviously, this one has some work to do to get there. But if it does, pops above that downtrend line, these are all potential longer term targets. And again, that's EGO. All right, I told you there's a few that if the precious metals and miners take another leg down, let's just cover those real quick. We're almost done with the video. There's FNV. And what I'm looking at, see, you have this one walking up in a rising channel. Now, the PPO is currently still in bullish territory. The 9 EMA, remember, it's only that white line, the latter of the two, the second of the two to cross over the zero line. It's still bullish as of now, although pointing lower. RSI is curled up. So if we curl up here, that would be a successful back test of the zero line. And as I talk about, that often works as a support level. You can see the blue line crosses below. That's why I do not use the PPO line. I use the 9 EMA, the second of the two. And that way it filters out and you have a lot fewer whipsaw signals. There's a slight whipsaw signal there. Other than that, this indicator has done a near perfect job of defining bullish trends when above the zero line and bearish trends when below the zero line. And right now it's above it. We just found support, trend line support, as well as horizontal support. You can see these two lines here. You can see a lot of support, support. So this may be an objective long, but again, if it breaks that line and it moves much lower and that trend indicator crosses bearish, could prove to be a short. All right, Royal Gold. RGLD. This one just barely cracked below trendline support. Not a lot of reactions, but something I'm watching. And it's also threatening to cross down below the PPO down into bearish territory. So if it regains that level, great. There's some support levels below. But again, I'm giving you these because I want to show both sides of things here in case the metals take another leg down. These are some potential short trades because you have these trend lines in KGC, for example. It's a well-defined 1, 2, 3, 4, 5 reactions so far. It's working its way up. Remember, a trend line or support is support until and unless broken. So you have an uptrend line here, stock in a clearly well-defined uptrend, but there is negative divergence, and that's why I'm highlighting this. Maybe that divergence is burned through, maybe not. But for those looking to position short, you can set a price alert there. And I would not short any of these unless you get confirmation in the sector. You want to see the dollar, gold, silver. You need to make a bearish case on those because these birds of a feather flock together, and that's especially true in the mining stocks. Don't fight the trend overall. You need confirmation to go long or short, in my opinion, when trading these. All right, GFI, Goldfields, there's a breakdown of this minor uptrend line. Divergence, flat line divergence, really. You had about equal highs in the RSI and the PPO against prices making a higher high, so not very strong negative divergence. But if it comes down, here's some support levels to buy it at. Probably fall at most down to this uptrend line, and then it may be a buy there. And then last one is IAG. And this one's flirting also with trendline support. Had a little brief spike below intraday yesterday, regained it, flirting with that level again today. Trend indicator is bullish for now, but pointing lower, so one to watch. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.